I wanted to talk for a minute this morning about Tapestry, TPR. This is the best idea long. It's got signal strength. I like this stock here. I don't love it. I like it. Now, I loved it at $60. That's when we went long. I thought it would be good for a $90 stock as the company went into an upward earnings revision cycle and the pods inflected positive, and it blew through 90. It's now at 116. So yeah, it looks expensive, but I don't give two shits about that. I look at the pods. The pods are still inflecting. So pod one is still inflecting. You have revenue that's going up here. This company, one thing I like about the handbag space, which is where Tapestry operates, its primary brand is Coach, is that the brands are all staying in their lane. So you have Capri, they're staying in their lane at about a $250 handbag. Coach is going up from like a $300 bag to a $400 bag. We're starting to see some strength in the luxury price points. So they aren't stepping on each other's toes. And this is a category where they used to really compete with each other quite a bit. But again, they're staying in their lane. I like when competition doesn't get aggressive and everyone knows their lane and they stay in it. I was actually asked this question on the retail show on Monday. Someone asked me which companies are most likely to beat the quarter that's about to be reported and guide up. I neglected to mention TPR, but I think TPR is going to crush the quarter. The consensus is already looking for 23% earnings growth. And I think they're going to come in over 30% earnings growth. So yeah, like if you're going to say, oh, it's expensive, like what is 30% earnings growth worth? You know, is it worth 20 times earnings, 30? I don't know. You can make up a number. I don't care. So I think TPR, particularly in the upcoming quarter, looks really good. I think there's going to be a fundamental catalyst, which is going to show people who are short it right now that pod one and pod two are still accelerating. This company's got a great balance sheet. It's buying stock. It's doing everything right. So I like Tapestry, TPR.
Hey, Brian, it's PK at Ham. Can I ask a quick question on TPR? What do you comping the margins to, like where they could go? Because Coach already has pretty stellar margins. So we're going to a pricing cycle. I'm trying to think through, like, where would you comp this for where the margins could go in terms of earnings power?
Yeah, it's a great question. So margins here are really high in this business, the handbag category. I like that they're high margin and high operating asset turn. And when you get that concoction of the high margin and high asset turn, you get really high cash on cash returns, which takes this thing much higher. Right now, the company is putting up about a 70% gross margin. It's putting up like a 20% operating margin. I think gross margins could probably go up by 200-300 basis points. You look at the luxury players like the Hermes and LVMH, these guys are operating at about 72-73%. There are certain companies like Prada, which have an 80% gross margin. I don't think Tapestry will get there, but I definitely think you can eke out safely 200-300 basis points in gross margin. They're not going to have to spend more in SG&A to get there. So that's going to take your EBIT margin up. I think you have runway on the EBIT margin here with TPR up to the mid-20s.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.